Investing in penny stocks requires caution. It requires caution. It requires critical analysis. It requires in-depth research due to their inherent risk. So here is our strategies to help you identify credible penny stocks you could invest in and create wealth. All right. So the video is how to find credible penny stocks investment opportunities. It's a kind of step-by-step guide you could utilize. Number one is conduct thorough research on the company. In this case, you consider the company's financial health. You look at the balance sheet. You consider the income statement, and as well as the cash flow. So you identify whether the company is strong financially. It has the financial health is strong or not, is sound or not. You also look at the industry outlook. Consider the industry in which the company is operating from, and determine the overall outlook for that particular industry. Is it a growing industry, or is the industry experiencing a tail, undergoing a kind of downturn? That will go a long way in helping you to determine whether to invest or not in that particular company. You also look at the management team, research the leadership of the company, look at the management team. Are they experienced executives with proven track records? Do they have that particular shareholder alignment, in mind? So you consider all these factors. Number two is avoid overhyped stocks. You avoid overhyped stocks. So in this case, you look at promotional campaign. Be cautious of stocks, promoted heavily through email, social media, or other channels, as this can be part of a fraudulent scheme like pump and dump scheme. So you also consider stock reviews and news. Look for independent reviews or news articles from reputable sources that is talking about the stocks you want to invest in. And also, it's necessary you avoid media hype. Number three is check for transparency and regular compliance. You check for transparency and the regularity of compliance, as far as these stocks are concerned. So you may need to search for the SEC filing, ESC filings. So verify that the company files regular reports with the Securities and Exchange Commission. Public companies must disclose financial and material changes, ensuring transparency. In other words, how transparent is the company when it comes to filing its reports? And you may also need to take into consideration regulatory history. Ensure the company complies with industry regulations and isn't involved in legal or financial issues. Number four is analyze market liquidity. You analyze market liquidity. In this case, you look at trading volume. All right. Ensure that the penny stock has enough liquidity to be able to execute trades without substantially affecting the prices, the price of the stock. Can you buy, in high volume without affecting the stock price? Can you equally sell, in high volume without significantly impacting the stock price? So not only that, you also talk about the bid-ask spread. How tight or how narrow is the bid-ask spread? The tighter the better, the narrower the better. If it's too wide, then it will affect transaction costs. It might lead to higher transaction costs. or trading costs. Number 5 is look for growth catalysts. You look for growth catalysts. In this case, this might involve, involve innovative product or services. Might involve innovative product or services. How innovative are the company services and products? Are customers willing to buy into their services or buy their products? Because if they are so willing, that will lead to potential growth in profitability and, of course, share prices. Then you talk about strategic partnership. So look for companies that form partnership with larger, more established companies, or that are entering new market, that are expanding their geographical coverage as far as their products and services is concerned. So this can provide credibility and growth opportunities for the company. And also you need to highlight positive news or announcements. You need to look at positive news or announcements. Pay attention to developments such as product launches, new contracts, or breakthrough in research and development while the company is concerned, because this could then eventually drive stock prices higher. Number 6 is use stock screeners. So you use screening tools to be able to determine precisely the stock you want to buy based on predetermined criteria like market capitalization, profit margin, cash flow, and other relevant factors. Number 7 is monitor insider activity. You monitor insider activity. Is the management team, are members of the management team, are they selling stocks or are they buying stocks? If they are buying stocks regularly in large quantity, that means they have confidence in the stock, in the company. In that case, you could buy. But if they are selling stocks regularly, it means that they are losing confidence in the company. And as insiders, they know better than you. So it's advisable you don't buy stocks in such companies. Please like this video and subscribe to this channel if you've not done that. Number 8 is review historical performance. In this case, you talk about earning performance. How is their earnings historically? Is there that increase in earnings? Is the earning increasing year in, year out? Percentage increase year in, year out? And you also look at the stock price trend. Look for stocks that have shown consistent growth over time, rather than those that are subject to extreme volatility with no clear direction. They're just going like this. The graph is going like this with no clear direction. Look for the ones that are kind of trending upwards, trending upward. Those ones are better. Number 9 is assess risk versus reward. You need to consider the risk reward or the risk versus returns in that particular company. So you may inculcate risk management. So understand the risk involved with investing in penny stocks and prepare to only invest a portion of your capital you can afford to lose. It should form a tiny part of your overall portfolio, because they are highly speculative and they can incur, you could incur large losses because of the inherent, volatility in penny stocks. So you may also consider diversification. Don't concentrate your entire portfolio on penny stocks. You could also buy into other different caps, like large caps, mega caps, and mid cap stocks. Should form part of the portfolio. Number 10 is follow reputable financial sources. When it comes to financial news and analysis and analysts, go for the ones with solid reputation. In this case, you follow credible financial news sources and stock analysts who provide objective, insights without bias, and research on penny stocks. Avoid rumors or unverified tips. By focusing on research, transparency, and solid growth prospects, you can identify penny stocks with potential while minimizing risk. Always remember that penny stocks are highly speculative, so invest cautiously and prepare for volatility, because volatility is an inherent aspect of this nature of investing. Be prepared for it.